Hello and welcome to FIS Group's 2017 Outlook for Frontier Markets. We'll start with a review of 2016 and an overview for 2017. Then we'll dig down into our themes and investment recommendations for 2017 and share a report card on how our 2016 themes and recommendations turned out. Frontier markets were mixed in 2016, with a handful of markets posting big gains on the year, and most of the Middle East and Africa lagging the rest of the group. Overall, valuations are still attractive compared to other major market segments. Several of the biggest markets in the MSCI Frontier Markets Index were flagged in 2016 for promotion to emerging markets status. Pakistan has already been upgraded in the FTSE Russell Index and is slated for a May upgrade for MSCI. Argentina is on the MSCI watch list for upgrade, while Romania is on the FTSE Russell watch list. Meanwhile, Nigeria is in danger of expulsion from major indices unless it is able to sort out exchange rate and convertibility issues quickly. In 2016, we continued to favor managers that don't rely on high levels of liquidity for their asset class. We believe that there are distortions in the market, caused by some of the largest global frontier markets managers holding a substantial percentage of the asset class. For 2017, we remain bullish on Argentina, Vietnam, and Frontier Europe, and add Pakistan to that list. We remain bearish on most of the Middle East and Africa. Now let's take a closer look at some individual regions and markets, starting with Argentina. For 2016, we predicted that new and improved macroeconomic governance would lead to steady renormalization of the market. Reformist President Mauricio Macri took actions in 2016 to reintegrate Argentina into global capital markets, and the Argentine Merval rose 42% over the year. This year, reasonable valuations, continued market reforms, added liquidity, and falling inflation and interest rates all point to good news. Some risks remain, but Argentina appears to be poised for a few years of bull market returns. Next, we'll look at Vietnam. Entering 2016, we believed that the stock market had not reflected the 10 years of strong economic growth the country had experienced. While Vietnam's market finally delivered, turning in a healthy 17% return, the MSCI Vietnam Index did not fare as well, after adding Vinamilk as its largest holding at its top price after a 50% run-up. For 2017, we see new regulatory and structural catalysts adding depth and liquidity and expanding access to a market where there is still room to realize gains from a decade of economic growth. The next region we'll discuss is Frontier Europe. We believed that improved growth and sentiment would trickle across the euro area into the cheaper, faster-growing markets in Eastern Europe, especially Romania. Romania's 14.7% advance drove the MSCI Frontier Europe Index gain of 6.9% for 2016. In 2017, we anticipate that improving Eurozone growth and a turnaround in the Russian market will increase liquidity and access to a reasonably priced and long-neglected region. Now, we turn to Frontier South Asia, Bangladesh, Sri Lanka, and Pakistan. Last year, we weren't keen on these markets. There were positive tailwinds, but unattractive valuations and potential headwinds made us hesitant. However, Pakistan moved up 41.5% and Bangladesh gained 10.8%, while Sri Lanka lagged 4.7%. For 2017, reforms have brought local investors back to the Pakistani market in large numbers, and the market will upgrade to emerging market status this year. Interest rates are at the lowest levels in 30 years, making risk assets more attractive. Countries in the Gulf Cooperation Council, or GCC, are up next. Going into 2016, we expected to see some rebound in these markets in step with rising oil prices. But valuations were not compelling, and we did not believe that the uptick in oil prices would be enough to spark significant growth or earnings. The region did recover, but not dramatically. Not much has changed in our outlook for 2017. Valuations remain unattractive, and there are fiscal and policy headwinds. We are eager to see the outcomes of reform efforts in Saudi Arabia. Kuwait has fewer pitfalls, but less potential upside as well, amid political tensions and free-falling real estate prices. In Oman, fiscal challenges and a possible currency crisis blunt chances for growth. Finally, let's look at Sub-Saharan Africa. Our outlook for 2016 was not rosy for this region, and we believed that stagnation would be the theme for the year in Nigeria, Kenya, and Morocco, with the exception of some relative upward correction for Nigerian financials. Nigeria and Kenya did struggle as predicted, and Nigerian financials did outperform the rest of the market. However, we missed on Morocco as the market rose into even higher valuations. Nigerian consumer stocks are still overbought, while financials remain relatively attractive. Kenya is likely to hit some macro headwinds and policy uncertainty in the financial sector. Morocco is strong relative to the region, but valuations remain lofty. We'll close with a summary of our positioning recommendations for the year. We suggest overweighting Argentina, Vietnam, and frontier Europe versus frontier markets, along with Pakistan until it upgrades in May. In the GCC, we recommend an underweight or zero weight relative to FM, and in Sub-Saharan Africa, we would steer clear of Kenya. We would underweight or stay neutral on Morocco, and underweight Nigeria with an overweight to banks and an underweight to consumer names within any Nigerian allocation. Thank you for viewing this presentation. For more on this outlook, please visit our website at fisgroup.com or contact us for further information.